Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, December 11th. Before I forget, today being Friday, of course, there's weekly option expirations today. Please check all your positions if you typically trade weekly options, just to make sure you got everything covered so you don't get any surprise assignments tomorrow, things that kind of fell through the cracks. It's always good on a Friday morning just to scan your positions, make sure you don't have anything expiring today. And then next week is the December regular options expiration on the 18th. So we have a couple of, or at least one of those positions on right now, and I'll discuss that one with you this morning. Okay, let's start off with SPY 2 hour. We had the big breakdown on, let's see, that would have been Thursday. And since then, we've built what looks like to me as a flat flag. We came down and touched the top of the gap and bounced and then settled in right above this 366 level, which we had marked on the lower time frames. We'll look at that. But just from a candlestick structural standpoint, we're below the wedge and we're in a flat flag. Still above key support, which I view as 365 on the at the top of the gap. Notice that these bearish divergences are beginning to play out with some downside, and we've got an RSI trend break with RSI below 50, moving into the bearish regime. Now, what kind of gives me pause is that usually on a one-hit wonder, what I mean by that is a one and done, scary sell-off, goes down. If it's going to be a one-day thing, they usually bounce it pretty hard, and create that V that we've seen so many times before. We didn't really get that yesterday. We got a sharp move off the bottom, but the momentum after the first, let's say, 90 minutes, 2 hours, it died. And you can see that here on the candlesticks. Let's look in the 30-minute chart. And what I've done is basically drawn a bear flag setup. It remains to be seen whether that plays out. But we had the initial impulsive move down. We had the overnight, spike down where we opened, below 366 and went down and took a look into the gap, and then they popped it right back up. They could not get above this 368, which was a prior low and a prior breakout point. That's what made 368 important. And then, of course, what was once support is now resistance. And that's what made me cautious yesterday, not being able to break above this 368. So what I've colored, I simply colored this in red as signifying, looks like a flat bear flag. So move down, consolidation, move down. And in the pre-market, it's coming up on 7 o'clock as I start this video. And just a little before I checked SPY, and it was trading around 363. What I would anticipate is when we open, I would be ready for, just a flash move to at least tag the bottom of this gap, and then see if they can bounce it back up. And then, of course, if they can't, a break of 362 opens up the door down to 360, and then we've got another gap down here at 359.5. Um, I don't want to say whether I think that's going to happen or not. It really doesn't matter what I think. Focus on trading level to level. You know, open below 365 favors them going down and tagging 362. If 362 then becomes your pivot, below favors 360, and then, you know, a break of 360 favors a move to the top of the gap, and then a gap fill, and so on and so forth. I really think what's going on from a market perspective is just some overcooked sentiment and overcooked momentum bleeding out. I don't view this as some, you know, oh my God, seminal moment, regime change, now we're bearish. I'm viewing this as, you know, let's get the vaccine approved, number one, and number two, let's get the COVID relief package passed before Congress goes out for recess next Friday. So those are the two positive catalysts that I see out there, and I think you will get a positive reaction if, in fact, those things come to bear. If we drag out another week and, you know, the FDA says we need more data, and McConnell says, you know, we can't come to an agreement, and then everybody goes home for the Christmas holidays, then you may see some, you know, further more significant downside activity. So what I've been doing is protecting longs. And I shared with you, you know, the hedges I put on last night. I kind of got the feeling in the trading room, it was like, why are you doing that, you dummy? You know, it's one of those things. If we were up 20 handles this morning, you're a dummy. Now that we're down 20 handles, oh my God, I should have bought, you know, protection. It's one or the other usually on an overnight hedge like that. And, you know, hedges are the kind of thing you hope you're wrong, because you're trying to protect a long book, and you'd rather see those go up than, you know, turn in your insurance policy. But it is what it is. So now we got to figure out where we're going today, and then how we want to be positioned into the weekend. How much exposure do we want to carry? Moving on to the Qs. Big move down. Momentum overshoot down to tag this 297.50, 298 area. And that would have been, we'll see it. Let's talk about that in a minute. But I was going to say that would have been a perfect place to you know, initiate your objective long. But we got the bounce, but then it kind of died. You can see the momentum come up, peak out here at 303, and then, you know, get soft the rest of the day. So for today, I had prices at around 299.50 as I was starting the video. So down in here. So maybe a first move is to test the prior low at 297.50. And then if that breaks, then you've got, you know, $4 of downside here that you would definitely want to get short just on a tactical basis. If we're going to extend this move, you know, A, B, C down, you want to at least have some, you know, if you've got a long book especially, you want to get some puts right now on a break of 297.50, because if the ball gets rolling downhill, the next stop is 293, and you certainly want to mitigate some pain if you've got a long book to protect. Now, here's the whole move on the 30-minute chart down, momentum overshoot down in here. And this is where, you know, your active trading hat comes on. You get a touch, you know, at a well-defined pre-known level, and then you get that, that hammer look. Even if you did not buy, down in here, the recapture of 300 was definitely an objective buy. Remember, breaking level and then recapturing it. 300 would have been a nice buy. You could have bought 302 as a recapture as well, but it turned out you missed a lot of the move by that point. But you never know that. You could have gone up, and you may have eventually been stopped out on that. But your objective buy points yesterday were into this support, 297.50, 298, or the recapture of 300. Those would have been really nice buys. The one thing I'm concerned about here, not only that we're already down here in the pre-market 299, but notice the momentum profile. Talk about bounces that come up and then roll over below the zero line on momentum. That's usually a bad sign. And same thing here, RSI oversold, bounce, but never recaptures 50. So it keeps it in the bearish regime. IWM much stronger. Really just came down here to test this 188. Nice bounce. This morning I have us down back again just above 188. So it's again testing this support level. I think if 188 were to truly break, I think there's $3 of downside into 185, where you would see some support here at the top of this prior trading range, and then if things really fall apart, back into 181 at the bottom of this range. Here it is on the 30-minute chart. Move down, bounce, double check the low, bounce it hard, recapture 190. As far as active trading, a double check of the low is a great place to try a long once that 188 was recaptured. And then you could have even bought at 190 and look for a move higher on the recapture of this level. Those would have been nice spots. Now notice on momentum here, we haven't moved below zero yet, so we're still in the positive momentum regime. We did dip below on RSI, but we are now back above 50. So on a relative basis, IWM much stronger than SPY or QQQ. Moving on to FANG. Nothing much happening here today or yesterday. Got some moves in here. You're wrestling around in this range between 274 and 280. I think really the sustained moves would be a break below 273.50 or a move back above 280. In between is going to be, choppy and frustrating. I think you got to wait till you're at a boundary extreme before you do anything. So that's where I would be setting my alarms. Apple, big move down, right into 120, which was a original breakout level. That would have been a nice place to take a stab at a long for active traders. If not there, on a recapture of 121, and you got a little more than $2 out of it. Notice where it stopped though. This 123.25 had been pretty stiff resistance here, and it also had been support here. So what was once resistance becomes support, and then broken again becomes resistance. So 123.25 is your level. Above, you can be long, but below, favors a move back into 121 and 120. Tesla, this was the trade of the day in terms of the the fat man trades. We had talked in the pre-market about 580 being the pivot for the whole thing, and we had talked about this open gap. It's been on the chart for a while. Right out of the gate, price came down, broke 580, filled the gap, and gave you that hammer look, the wick, the wick on the bottom, the tail, right after it filled the gap. So, of course, using our principles, a gap fill is a good place to try a long, and it filled the gap and actually recaptured 570. So that was a buy point, just on a technical basis. Another buy point was the recapture of 580. So okay, you missed that. You were a little gun shy, a lot of red on the board. Is this bounce going to hold? Blah blah blah. 580 was another chance for a buy. And then your final chance for a buy was on the recapture of 600. So at any one of these points, if you bought at 570, you were a hero. It never looked back. If you bought at 580, same thing. If you bought at 600, you never got stopped. If you had your stop just below, you reached up, came back for a back test of that breakout, and then advanced forward. So in any of those scenarios, you were nice and profitable upon your entry, which is really, really nice. So that was a nice trade. Microsoft, nothing. Drop below this 212 area. I expect it'll dribble down into this 209 area. I think a nice trade would be, number one, keying off this 209. If you get a gap entry here at 209, I think you should be short and look for 205, 205.50 on that gap fill, and potentially down to 204, but be ready to cover and reverse. If they go down, fill the gap, do a little overshoot, and then recapture, that would be, again, your buy point on a bounce. Amazon, flat as a pancake, not doing anything. 3100 remains your pivot. Above, you can be long, looking for 3150. Below, looking for 3050. Google, nothing. 1760 remains your pivot. Netflix, not a lot going on here either. It did come down right into this 494 where that held. If you wanted to be long, that was a nice place to be long against that well-defined level that we've been watching forever, and they popped it up to 505 and then settled in. So today, 505 is a level of interest, as is 494, and then you can either play that range or a breakout or a breakdown from there. And just a couple words on the FANG trade and the active trading in those names. A couple things come to mind. In general, for active traders, I think it falls into two camps. Camp one is really get to know a handful of names that you own. What I mean by that is, they have the volatility, you own the levels, you're comfortable trading them, They have liquid option chains where there's not a lot of leakage, between the bid and the ask, and that, in your handful of names, there's usually something going on where you can participate. The other camp of active traders is, have all your scanners and your catalyst driven, more of what's moving this morning, and you're all over. It's a different name every day, and you're just trying to trade price action based on a moonshot after earnings or a crater or a news event or whatever. I'm mostly in the first camp. That's why I go over FANG every day. Those are a handful of names that there's usually something going on. But that's changed lately. They've gone flat. So you have to decide whether, I'll be patient. They're not going to be flat forever. And when they're not flat, I'll be ready. Or you can say, I'm going to look for some new names. I think either one is fine. There are times during the day, in the trading room where someone will, oh my God, XYZ is moving or breaking out. I'll grab that trade. I'm not afraid to do that, but I'm not actively in my pre-work, I'm not actively looking for catalyst-driven moves. If there's an earnings move, like CRM, where I'll box in and make turn it into a bracket trade, that's more of a second day play for me. And we do those all the time, but I'm not looking for catalyst-driven. So if you feel like the things that you've been trading are going flat, I think you've got to decide: am I going to change my routine? Am I going to change my am I going to change the stocks that I trade? Because I think the ones I'm having now are too flat, or am I going to stick with it? And I think yesterday was a perfect example. If you're focused on 6 names and you have your levels, the move was Tesla. That was like, what was that? $70 or $80 off of the initial buy. And even if you missed it, $60. Even if you missed that, $40. Those are good. You'd be happy at the end of the day having captured that one trade. I mean, that's a great trade, and that trade can pay a lot of bills. But if you went into the mode, all this stuff is flat, and I'm going to go look for something else, you may have missed that trade. So it's a matter of where you want to put your focus and place your attention. So I hope that was helpful. All right, I want to look at a few of the positions that we have on. We put on January 85 calls on pizza. It has broken out above 62.5 and is kind of treading water. I don't want to see this fall below 62.5, that original breakout level. So, let's put a stop just under there, and take some action if this whole thing falls apart. If we're just in a little soft spot, I think 82.5 will hold. If it starts falling apart, let's close it out and regroup. Expedia, we have January 135s, I believe. We broke out, then we had the sell-off, but it popped right back and was really going yesterday, and then got soft into the close and is back at this 130 spot. I think there's some buying pressure here. I don't know if that's COVID relief plus vaccine, But I want to hang in this until we get that vaccine emergency use authorization and start vaccinating some people. I think that's going to lift the travel stocks. So I want to stick in. I want to hang in there on Expedia. And on this, we'll call it a fake breakout. It would have been so easy just to bury this thing once it fell back into the range. But look at all the moving averages, supporting this and moving higher. I think there's some underlying support here, and I think there's some underlying buying pressure. At least that's, I'm talking my book. I'm long, so trying to come up with reasons to stay in the trade. But I think no question, as long as it holds 130, we got to stay long. And I want to give this a little bit of room here, even if it drops below, and see if the COVID vaccine authorization gives it a lift. All right, Brinker, EAT. We are in December 55 calls. We are knocking on the doorstep of 55 with 54, 57. We got a week till expiration. Even though we have advanced from our entry point, we, as far as the position goes, are more or less treading water, because in the time that it's taken to make the advance, of course, time decay has been working against us. So here's what I want to say. Any pop from here, well, let's say it this way. This position is going to get really volatile. If it's up $1 today, the position will be up a lot. If it's down $1 tomorrow, it's going to go down a lot, because the time to expiration is short, and that volatility is really going to expand on the position. What I would say is this: if you get a good pop, I'd take it off. Unless you're, a riverboat gambler, I'm going to just let it run to expiration. I think they're worth about $2 right now, something like that, maybe a little less. If it runs, if the market turns around and COVID vaccine and restaurants pop, it'll be a winner. If there's a bad down day, these might go to zero pretty fast. So I'm going to leave it in your hands. You know that my plate is full at this end as far as looking at things every second as it gets closer and closer to my move. So stay on top of that position. I would grab anything that you can, especially if there was a good pop. I feel bad about a couple positions we were recently in, Snap being one of them, Yeti being another one, YETI. We had December expirations on those, and I thought, man, we're getting close. Let's take some small profits, and of course those ran after I closed out, so that was disappointing. So, anyways, manage this one with care. BIDU. I think we might have a tiger by the tail here. We are in January 150s, and those cost us 6.25. They were trading 12.25 yesterday at the close. Of course, they'll probably be down, today if the market's down. But, if there's an advance, we've only been in these a couple days. If you get a double and you only been in the thing 2 days, I'd like to see a roll up, and let's roll out to January 160, and those will cost us again about $6. So, that we can stay long, put our win in the bank, and then see if we can get that push to 170, which was our target. 6 weeks from now, that would be a great trade if we can get that kind of follow through. And then lastly, a new idea for you. CCJ is the Cameco Corporation. This is a uranium play, and I think things are changing. This is the monthly chart, so this is going back years. Double bottom, bullish divergence, breaking out. The measured move is 65%, which would put us up at 20. And here's the deal. Here's what's emerging. Ever since Fukushima in Japan, a lot of the nuclear industry, they pulled the plug on it. Very little new construction, globally. And there's been uranium prices have been depressed. Okay, and you can see that in the chart, obviously. This used to be a $50 stock. But things are changing. The ESG push and the push for zero carbon, the thing that's fueling wind and solar is going to end up fueling nuclear as well, because you can't get to zero carbon unless you've got nuclear. And it's one of those things like, I'm against it, I'm against it, I'm against it until I'm for it. I think that's what's happening in the environmental front. Everybody's worried about, nuclear waste until a bigger priority is carbon emissions. And you just can't get there with solar and wind. You need to have nuclear as that base load. And this may take a decade to play out, but it won't take a decade for uranium to firm up and move forward. So I'm seeing people buy leap calls 1 and 2 years out on Cameco. And there's other uranium plays too that I'm going to research, but yeah, I see this short term, moving into the mid-teens, and then longer term breaking this, 10-year downtrend, and then, moving back higher as the second dawn of the nuclear age comes about, and people start putting up reactors for carbon control. So let's wrap it up here. I hope you guys have a good morning. I will send you a private note on my itinerary over the next 10 days as I move world headquarters from Michigan down to Florida. So you'll know what to expect from me. If you're new to the channel, please hit the subscribe button and the alarm bell. I'd love for you to be on board in 2021 to tackle these markets together. I'll try to keep you posted with informative comments and observations. I'd love to have you along for the ride. Please look over in the show notes for convenient places to register for my content and links to the blog site. And if you do that, you'll get an invite to our trading room. And I couldn't be more pleased how the community is developing. A lot of good stimulative ideas in there, and a lot of good guys as well. A great place to expand your trading network, which is always an important but often difficult thing to do in the virtual world that we live in. So we'd love to have you join the community. Have a good morning of trading. This has been Chris Butts with Traders Profit Compass. Talk to you next time.